The IRS just changed what your home is worth. And I don't mean your Zillow estimate. I mean the number they actually use to decide how much tax you owe when you sell. It's called your cost basis, and most homeowners have never looked at it. Here's how it works, and if you want to plug your own numbers into this, I put a link to this calculator in the description. For example, you start with what you paid, say $280,000. Every capital improvement you make, new roof, new kitchen, solar panels, it all gets added. So let's say you put $70,000 into the house. Your cost basis goes to $350,000. You sell for $600,000. The IRS says your gain is $250,000. If you're married, you can exclude up to $500,000 in gains tax-free. That basis number, it's everything. It's one of the first things my attorneys at protectwhatsmine.com built into my own tax plan. And 3 new rules just moved it. One of them killed a credit overnight, one of them changes how your improvements count, and one of them could put thousands back in your pocket, but only if you catch it before you file. Rule number 1, the one big beautiful bill. It killed both Section 25C and 25D. Those are your energy tax credits. The energy efficient home improvement credit and the residential clean energy credit. Both dead as of December 31st, 2025. Now here's what nobody's connecting to your home's price. If you claimed any of those credits, solar, heat pump, insulation, windows, in 23, 24, or 2025, IRS Publication 523 says you must reduce your cost basis by the credit amount. And I'll put it here on the screen. And look, there's a lot here. No need to memorize it or even write it all down. Don't overwhelm yourself. Just keep it really simple. Send this video to your CPA before your meeting. And don't worry about insulting them. Worry about missing something. So let's go back to that $350,000 basis. You claimed $6,500 in solar credits over 2 years. Your basis just dropped to $343,500. That's $6,500 more in taxable gain when you sell. And with home prices up 40% or more in a lot of markets since 2020, more homeowners are bumping up against that $500,000 exclusion than ever before. Every dollar of basis matters now. And here's the part that's really burning people. The IRS FAQ says the credit was based on when the installation was completed, not when you signed the contract, not when you paid. If your installer finished December 30th, you got the credit. January 2nd, same system, same check, you get 0. And your basis, it's different in each scenario. Rule 2, with those energy credits gone, how you document every capital improvement to your home just became critical. The IRS uses Publication 523 and Publication 530 to define what counts as a capital improvement versus a repair. A new roof, that's an improvement, adds to your basis. Patching a leak, that's a repair, doesn't count. But here's where it gets interesting. If a repair is done as part of a larger remodeling project, the entire job can sometimes qualify as an improvement. That's one to run by your tax pro. Most homeowners don't track any of this until they sell. And by then, they've lost receipts, they've forgotten projects, and their basis is thousands lower than it should be. That means they're paying tax on gains they didn't actually make. With almost 20 years in real estate and over $50 million in deals, I can tell you, the folder wins. Start a physical folder or a digital file. Every contractor invoice, every material receipt, every permit. The folder is your home's price to the IRS. Rule 3, your property tax, which is literally how your local government prices your home. It just became a bigger lever on your federal return. The SALT deduction cap went from $10,000 to $40,000. That's your property tax plus state income tax. For 7 years, a lot of homeowners took the standard deduction because the old cap made itemizing pointless. Well, that math just flipped. IRS Revenue Procedure 2025-32 has the standard deduction at $31,500 for married filers in 2025. If your property tax plus state income tax exceeds $10,000, and it does for a lot of homeowners in high tax states, you need to run both scenarios before you file. Itemizing could put $2,000 to $9,000 back in your pocket. There's one catch. The $40,000 cap starts shrinking once your income passes $500,000. So for every dollar over, you lose 30 cents of the deduction. The more you saved, the less you get. Now here's what you want to bring to your CPA this year. Your 2024 return, line 12 on your 1040. Did you take the standard deduction? Your property tax bill in W-2, box 17. Your state income tax. Add those together. Every energy credit you claimed on Form 5695. Because your basis needs to be adjusted. And every improvement receipt you can find. The folder is your home's real price. 20 minutes of homework could save you thousands. So the cost basis, the tax credits, and the SALT cap, all of that assumes one thing, that the deed is clean, it's in your name, and nobody can touch it. And that's a whole other conversation, because there are 3 documents that actually determine whether your equity is protected or just sitting there exposed. So to confirm, I pulled this video out here for you to watch next, because it picks up exactly where we're leaving off here. Same stakes, same urgency, just a different angle on the same house. All right? God loves you, and so do I. Take care.